Hello and welcome to Views from the Market, Midmarket Private Equity and M&A in Canada. My name is Mario Nigro, and I'm a partner in the Private Equity and M&A group at Stikeman Elliott. For today's podcast, I'd like to welcome our guest, Karen Fisman. Karen is the Managing Director in the PwC Corporate Finance Group. Karen, thank you for joining us and welcome.
Thank you very much. It's a pleasure to be here.
Karen, we always start the podcast by asking our guests to tell us a little bit about themselves and obviously your work at PwC and the Corporate Finance Group.
Oh, I'd be happy to do that. So as you mentioned, I'm Managing Director in our Corporate Finance Group and on the broader deals team at PwC Canada, where I lead our sponsored coverage efforts with a focus appropriate for this podcast, a focus on the mid-market. So what does it mean to lead sponsor coverage? I initiate and I build relationships with mid-market focused Canadian PEs, with family offices, as well as with a select number of U.S. mid-market PEs. And I'll explain a little more. I'll elaborate a little more because, certainly my mom and dad don't know what I do, but the purpose of my role is really to ensure that, number one, our PE relationships see all of PwC's relevant deal flow. For our sell-side mandates for our clients that we have to ensure we have the best fitting potential investors on our buyers lists. And in addition, I serve as a great first point of contact for many of my PE relationships when they need transaction services or value creation or tax advisory expertise, whether it's for a new acquisition or for an existing portco. And I think that I should pass that along to my parents.
Karen, I'm excited to have you on this podcast because I consider you one of the people who's at the kind of heart of the deal world in the mid-market. You're interfacing with deal activity. You're seeing the sellers. You're working with a lot of buyers who reach out to you because they obviously want to try to get some access to PwC's deal flow. And I wanted to start by kind of asking you a bit about what you're seeing. Obviously, there's a lot of uncertainty in the air. People are concerned about where the economy is going. Are you seeing on the ground? And I know you are in the trenches. We're in the trenches a lot. So I appreciate your insight as to what you see when it comes to deal flow or buyers out there still buying, and particularly U.S. and mid-market and private equity buyers. Are you seeing a particular deal trends? Just want to get a sense from you in this market, what you're seeing.
For sure. And there's a lot in there. I would say high level uncertainty breeds paralysis. And we're certainly seeing some of that. I hear from most sponsors that deal flow is way down. And certainly at PwC, I think we, like most, are hitting pause on processes involving businesses that might be impacted by potential tariffs. We can't in good conscience advise our clients who are manufacturers selling into the U.S. market that this is an optimal time to go to market. So processes like that are going on pause. So that's on the sell side. So real decline in deal flow across the board, I think in Canada and in the US. And now on the buy side, the decline in deal flow is really exacerbating this issue of aging dry powder. It's not making the dry powder age any faster, but it's making it more difficult to deploy. So we were, and I know you were as well, we were recently at DealMax, and I know most of your listeners will be familiar with that kind of speed dating advisors and PEs. But many sponsors that we spoke with shared with us that they were behind in their deployment schedules. And certainly there's a degree of anxiety associated with that. Another issue in this market is that portco exits, which had for a moment started to happen again, have dropped off considerably. And so I think, we'll continue to see the trend towards continuation funds and secondaries. And I think that will be sustained until the market normalizes a bit. So those are kind of the overarching trends, the anxiety to deploy capital, but the lack of deal flow is making that pretty tough. Given all of that and all of the uncertainty aside, though, buyers are still looking actively in Canada and in the U.S., looking into Canada. So service businesses more than ever are in favor. And when I say services, I'm kind of using a broad definition. So technology services, financial services, businesses, other commercial services that are serving markets that are not tariff impacted. So we're seeing buyers looking actively for those kinds of businesses. also seeing, at PwC, we have, as part of our deals team, we have a restructuring group. I'm getting more and more requests from potential buyers to make a connection to that group. We're seeing buyers looking for good business, bad balance sheet opportunities more than ever. And those opportunities are unfortunately likely to increase in the current environment.
You mentioned some industries and some particular buyers that are still doing deals, or some industries that are still kind of attractive to buyers. It's the buyers that are still doing deals. Is there any other characteristics you see in terms of deals getting done? Obviously, manufacturing businesses with kind of cross-border that are affected by tariffs, we know are getting kind of pushed to the sidelines. But are there any sectors or businesses that seem to be kind of getting over this and still getting done, or any sizes of deals, or any other characteristics on deal flow that you see the environment is still good to get a deal done?
Yes, actually, if I look at the types of deals that we're bringing to market, that's kind of representative. We're bringing the types of deals to market that we expect will get done. So there's often a niche quality about them. But, I'm going to be repeating myself. I go back to, like, if I think about our pipeline and what is on hold and what is not, the deals that are not on hold are all services, with the exception. So we have a financial services deal, an insurance deal that's in the market, kind of a fintech deal that's coming. There's a theme here. We have a very niche services business that's coming to market that will be highly tariff and recession resilient. So those do tend to be, with the exception of one large deal we have in the market, and I want to talk about that for a moment, but they tend to be on the smaller side than is typical for PwC. But the larger deal that we do have in the market, also services, but we've gone out to a very small list of buyers. So we're not doing that, broad auction. We actually feel that in these circumstances, we'll get the best result by going out to buyers and financial and strategics, but who really know this space well, that given the difficulties in the market, those are the buyers we want to focus on. And so far, knock on wood, so far, so good.
Karen, obviously the tariffs have kind of had an impact on economic activity, and we talked a bit about some of the obvious ways that they've affected deal flow, which is, for some of these type of businesses that are heavily influenced, we've kind of shelved deals, put stuff on the sidelines or at least paused them. Any other places you're seeing tariffs have an impact on activity other than the obvious, which is harder to get deals done, but any other ways or places you're seeing these tariffs really impact deal activity?
Well, I have a guess, which is that tariff-resilient businesses, this could actually be a fantastic time to bring tariff-resilient businesses to market against the backdrop of what we've already talked about in terms of, like, this aging dry powder, the need to deploy capital, not a lot of competition. There's just nothing in folks' pipelines. So I think there may, and I'm speculating, but I wouldn't be surprised if we see some sort of scarcity premium in terms of valuations on service businesses. And that's kind of a TBD. We'll see what happens there. But that's a hypothesis. I will say, despite all my talk about no manufacturing, all services, we are actually bringing a few services at a few manufacturing processes to market. But they're either selling internationally or just focused entirely domestically. Or they might be selling some product into the US, but that product is currently tariff exempt. So those kinds of manufacturing processes are still going.
Aaron, you hit on a topic that we've always talked about for years, the trend of having expectations of sellers not match expectations of buyers. And given the decrease in deal activity and feels like it's harder to get a deal done, and a lot of buyers were kind of more cautious. Are you sensing that we're getting better at expectations, or sellers kind of coming to market with more kind of practical and realistic ideas about what their businesses are going to sell for?
I think it's too early to say, because what we're seeing now is, I'm sure you're living this as well, like a falling off, when most of the processes that are now in the closing stage, the sellers didn't come into the market expecting tariffs and expecting earnouts, that deal structures that reflect tariff uncertainty. So My general sense is that the processes we're launching, expectations are a whole lot more realistic. The people that are selling now and are willing to go to market, there might be a reason. They might be, in their 80s and just have had enough. But I think my overall impression and TBD coming in this environment is that we are going to see more of that narrowing between seller expectations and buyers' willingness to pay. At this point, it's still a bit of a guess.
One of the things I remember from 08, 09, Karen, was that, as the market softened up, we started to see more, we'll call them value buyers or distressed buyers or however are you starting to see a lot of value distressed buyers specifically looking for those type of targets come and see you and say, hey, do you got something for me? Is that starting to happen on your end?
I mean, you hit the nail on the head. Yes. So I'm getting calls from PEs that are saying, hey, a lot more saying, hey, that process you ran, did it like what happened? Did the business, did it trade? And if not, we'd like to take another look. So there's that. There's that stream. So that if there was a failed process, can we get another look now? And the other stream is, as I mentioned before, a strong interest in connecting with our restructuring partners because they'll see businesses, they'll obviously work through CCAA, but they'll also see businesses that are at that stage before CCAA where they're distressed, but not yet going through a process. So there are a lot more parties that are interested in that kind of connection and that kind of deal flow than I had seen previously. Yeah.
And, I do a lot of work in independent sponsor space and kind of search fund, and we've been seeing more and more of them, even in this environment, and particularly because a lot of the deal flow is kind of mid-market, lower middle. Are you seeing these type of buyers more actively reach out to you or become participants in our market?
A lot. And some of them are kind of family office backed, and they might not have committed capital from a family office, but they'll have 2 or 3 families behind them. Well, I mean, I'm talking to you, the king of this stuff. But yeah, definitely, particularly in the smaller deals, anything kind of sub 5 million EBITDA, it's amazing to have this community of potential buyers to reach out to. Now, I mean, it hasn't been easy for them to get deals done either because they're facing obviously the same set of issues, but certainly there's a lot of them. Select list has become part of my roster as well.
I want to just talk a bit about strategics. I mean, are strategics active in this market, Karen, or are they also on the sidelines?
So, Mario, I can't speak to strategics that aren't owned by PEs. Certainly, strategics are part of our deal processes. They're part of our buyers lists, but that's kind of that's not in my wheelhouse. So certainly PE-owned platforms, PE-owned strategics are very active, but that's not what you're talking about. And yeah, I can't really speak to that. Certainly, there's still an important part of our processes.
One thing, Karen, what's interesting, I talk to Americans, with the American private equity, they highlight that in the US, a lot of sales processes have been put on hold.
Yeah.
But I find in Canada, when I talk to our sell side advisors, the owner operators are not saying, let's wait. They're willing to go even in this environment. They're willing to push forward. Is that what you're seeing? Are you seeing any hesitation from owner operators? Or do you get the sense that even with all that's going on in the macro environment, they're still pushing forward?
So we'll kind of take a holistic view. So if an owner operator is in his or her 80s and is just kind of ready to go, or there's some family dynamics that suggest that they just want to sell. And we have one deal, right? I can't go into details, obviously, but it's just someone that, because of family situation, wants to sell. Certainly, we're not advising those kinds of clients to pause because, I mean, the valuation and the monetary proceeds are only one part of life's journey. But for certain businesses, it just doesn't make sense. I'm trying not to use specific examples just for confidentiality reasons that we just pitched to a manufacturing business that sells 80% of its product into the US market. They import from China. How in good conscience could we say to that business owner, yeah, it's a great time to go to market now? We would say, let's hold off for 4 months, 5 months, and try and get some additional clarity. And then we can go to market and you'll have a better outcome because there'll be more certainty.
And I always ask our guests a bit of the crystal ball question, where they see things going. Like, you're on the ground every day. Where do you see the next 6, 12 months with all this kind of uncertainty, all this economic concern out there? Where do you see this all going?
So I'm a glass half full person, and even I am having a tough time feeling positive about the balance of 2025. And I've heard this a million times. I'm sure you have as well. We all ended 2024 with the expectation that 25 was going to be an amazing active year in terms of deal activity. So I do hope that we have a higher degree of clarity towards the end of the year. I think given that things are only going to get tougher and tougher in the US, I am hoping that there is pressure enough that we do have that clarity. And if that's the case, then I'm feeling pretty optimistic about 26 because there are a lot of processes that have gone on hold that have to come back for whether it's for family, for succession reasons. So there are all those processes that have stalled over the last 3 to 6 months, let's say 3 months, that are unlikely to launch until we get to the back end of 25. And then there are all the fundamentals that we've been talking about for, oh my God, I don't know how long, the amount of dry powder that is still out there and needs to be deployed, this appetite for deal flow, and we're going to be in a lower interest rate environment, hopefully still. Like the fundamentals that were off in 23 have corrected themselves. We have this kind of situation that if the uncertainty is ameliorated, we should have an amazing 2026. So 25, not optimistic. 26, super optimistic.
Aaron, I want to thank you for joining us. It's been great to get your perspective. I mean, you're living on the ground every day, so hearing from you is just great to get the kind of the pulse of the beat or whatever, the beating pulse of the deal-making environment. So thank you for sharing with us your perspective and a little bit about what you're working on, and it's greatly appreciated.
It's a pleasure. Thanks for having me on.
Thank you for tuning into Views from the Market. Stay updated with the latest episodes by subscribing wherever you find your podcasts or visiting stikeman.com/viewsfromthemarket.